Okay, but let's keep it with some more trading picks that you can watch out for. And you've got Sameet, Chavan, Mitesh Panchal. They're here to share with us their top recommendations. Sameet, cooling off for the markets right now. You've got some interesting buy calls and pretty much from the pharma space.
Good morning, Aman. Yes, we have three buying recommendations. First one would be on Glenmark for a target of 1010. Stop loss would be around 964. Recent correction in the stock precisely halted around its July lows of 926, 925. The stock has given a decent recovery and is now moving beyond its near-term moving averages. This is an indication that the stock is likely to move higher. In addition, the RSI oscillator is positively poised, thus with a target of 10101015. It can be bought at current level. Our second recommendation would be to buy Vocard for a target of 1720 and stop loss can be placed at 1565. Today the stock has given a breakout from a bullish cup and handle pattern on the daily chart. The momentum is quite strong. We expect this move to extend towards 1700, 1720 over the next few sessions. And our final recommendation would be to buy Havels for a target of 278 and stop loss can be placed at 256. After a long consolidation of nearly 2 to 3 months, the stock is now moving from its major resistance zone of 262 with sizable volumes. Thus, going forward, we expect this move to extend towards 278 over the next few sessions. Stop loss can be placed below 256.
Okay, there are some trading ideas coming in from Sameet Chauhan, but Mitesh Panchal also joins in then. And Mitesh would like to know, which stocks do you recommend and your reason behind selecting those stocks?
I am recommending three stocks. All are buy category stocks. So first is Bata India. If you look at the chart pattern, stock is consolidating between 450 to 475 since last few trading sessions. In today's trading sessions, especially in the early hours, we have seen the buying momentum and stock is trading at a level of 470 to 471. It has been witnessed that 15 and 60 minute charts are saying that every dip has been bought into in last two trading sessions. So if stock managed to trade above 475, then it will easily enter into a new trading range, and on the upside it can eye at 490. So stop loss here would be 460, target here would be 490. Second is a Yes Bank. If you look at this counter since last three trading sessions, it is trading in a very choppy range, and since last 2 days especially, stock is showing sort of a strong build up with price volume as well, which indicate the fact that during the 30 minutes and 15 minutes chart for the day, probably stock is now poised for an upside breakout. So one can go with a stop loss of 735 for a target of 780. Last is L&T. We have witnessed a strong sell-off in L&T in last couple of trading sessions, and now the trading range of 1300 to 1345 is acting as a very strong support. On the downside, stock is holding a very strong support in the range of 1335. So I am going long in this stock with a stop loss 1335 for a target of 1405.
Okay, there you have it. We've run you through lots of recommendations and top stock picks that you can look at from the markets right now. But in the meantime, let's talk a little bit about what's going on in the commodity space as well. To start off with gold prices, well, that's eased a bit as the dollar clearly seems to be gaining, offsetting the safe haven bids. Fairly subdued at $1,068 an ounce for gold, while silver is just about flat with a negative bias at $14.16 an ounce. Oil, meantime, marginally edging up on falling inventories as well as the higher refinery runs. Let's get in then. T. Gyanashekar, Director Comtrends Research and Fund Management, joining in on the show to share with us his top commodity strategies. And Gyanashekar, run us through what the word is on gold.
Well, bracing for the first interest rate hike, and also the safe haven bids which were expected post the Paris attacks died down, and it broke the recent lows at 1077 in the international market. So that led to a lot of selling as well. But with this background of an interest rate hike, it's very easy to understand that any kind of positive news will be short-lived, which is why nothing happened post the Paris attack. It was just a small correction and then it started falling again. So that's basically the trend which will continue, I think, going forward too. So it's a sell on any kind of optics, and the only thing traders and investors should do is also hedge the currency, because that could eat away the potential profits in the domestic markets.
Okay, that's the word coming in on gold. What about copper?
See, base metals clearly is in a downtrend, and with the Chinese demand waning, and there isn't any great hope of any revival in demand in the short term, and with the US dollar becoming more stronger, which kind of dents the physical demand also, it's just clear weakness all over now, and copper could continue falling even from present levels, though it looks a little bit oversold technically. So it's better to wait for any minor pullbacks and sell it on rallies. So I think 308 to 10 levels in MCX would be ideal to sell again. So one can wait for that kind of an uptick and sell for a target of 295 or lower.
Okay, thanks very much for sharing those ideas from the commodities space. Really appreciate that. And here's a disclaimer once again from our end. Please do consult your financial advisor before taking any positions in the stocks. Let's also take time out to thank each of our guests for sharing their trading ideas with us on Traders 20.